So in today's video I want to speak about fair value gaps and how I actually use them, in the sense of there's a lot of ICT traders and I've done all the ICT stuff, but I don't stick to that in the sense of all the different like SMT, divergence and all that overblown stuff. But I do look at fair value gaps as an imbalance in price and a place where the market could potentially return to look for entries. So I don't just use fair value gaps on their own, but I do want to explain it in terms of just how I would utilize them. So a fair value gap is a 3 candle pattern. So you can see here, if I take this one, where on the 4-hour chart we have a candle, a second candle and a third candle, and between the 3 candles there's a space in price. So from this from this low to this high, so I'll mark them off here, from this low to this high of this candle, you can see there's a space in price between these 3, and this is what I would mark as a fair value gap in price. So you can see here on this example, price came down. Now this isn't a valid trade or anything by any stretch of the imagination, but price came down, filled in price and continued lower. Within the higher time frame context of this, we could actually look at it as a trade. So as we're using our strong highs here to create a break of structure down, confirming that we are in a downtrend, price came up, made a high, fell to make a lower low, made a higher high, price came down. It didn't necessarily do anything here, so it's not really valid in the sense of what I short here. Not really, but it's good to be aware of it. But there's lots of fair value gaps around here that will show us what we're doing. So again, there's a price here, between these 3 candles. You can see price tapped into that and continued lower. There's another one here between these 2. Between these 2 candles, yeah. So there's a gap in price. So price uses that as a draw liquidity to fill. So for example, in this entire range here, on a 4-hour chart, there is no other space within this chart to draw to except for this. Same on this, as the high comes up, the only place for it to pull back to is into the fair value gap, and we can use these different things as indicators to help us find not only levels to trade from but also entries. So if my bias had been short here and it came down, I could look for an entry within the fair value gap here. So for example, if I pull it up here, we could see that there was, on a 15-minute chart, there was a low, made a higher high without a close, so a failed break of structure, and then continued back down to the downside. So what we have here is a lot of options. There's a fair value gap here, which I could look for a potential short from, and also on the other direction, which is actually a trade I'm waiting for at the moment, is we had price come down, it failed to make a higher high and made a lower low with a failed break of structure. So because this high failed to do its job and then bounced, this is now my strong low on the 15-minute just here. This did its job. It made a higher high for a 15-minute change of character. And so within this entire leg of price here, where I expect price to pull back to, because this is a strong low, let me just mark that off, 15-minute strong low, I'm expecting this to be protected. And again, it's an expectation, it's not an assurance. But within this entire range here, for price to pull back, you can see there's no fair value gaps here except for this level. So if I take from this candle to this candle, so 1, 2, 3, there's a gap in price, and I can drag this over and use that as my 15-minute fair value gap. Now price can come back through this and find an entry through here. I'm just using this as a draw on liquidity. I'm not using it as an entry price or an entry area. If price does react to the area, I'll definitely consider taking it, but I need my entry criteria to be available at this level. So then my expectation would be that it would, at least if it fails to make a lower low, then target this as potential level. If I look at my higher time frame, again using higher time frame structure, we had a low, it made a very weak high. I would need to find that in a different time frame, so maybe if I went to 1 hour. So I had a low, a high, and if I drag this over, we had a 1 hour change of character to the upside, failed to create the breakup structure, so that's a sweep. And now if it's doing its job, which is a bit of a tricky area for me in this case, because yeah, there's a sweep and there's no close, there's no 1 hour breakup structure, just a 15 minutes, so I do have to consider that as a long, because price is fractal, so whatever happens on the higher time frame must first happen on the lower time frame, and it's happening on the lower time frame. So I would wait then for price to come down to my level. My expectation is along, and again it's an expectation. I would set my alert here on this price and just say, now once it enters this 15-minute fair value gap, I'm going to look for my entry criteria to play out, so I don't need to sit around waiting for the market to play. Earlier on we took one on a very low time frame, so we were short here and we're going to be shorting it down to this level, so we're in this trade at the moment. To look at it, let's have a little breakdown of this really quickly. So we had a low, made a higher high, and then, sorry, you can see the breakdown there. There's a low, made a higher high, failed to make a lower low, failed to make a higher high, came down, created a change of character, and failed breakup structure to the upside. So you can see there's sweeps here, and after those sweeps, price breaks down, comes all the way down, sweeps the low. Now my expectation has changed to bullish, but I'm not just going to enter the trade straight off. Price doesn't just shoot up all the time. They're black swan events, so I need to be measured in what I'm doing here. So I'm looking at, for the bearish move, you can see here we have a order block with a crossover of a fair value gap. So you can see there's a fair value gap here. So you can see that that level is there. If I drag it over, what is the lowest bullish candle that created the break? So this was the low. This is my last bullish candle on that time frame, and this is added confluence for the trade. So we have a fair value gap crossing over an order block. Price comes up to that level. Let me just actually remove these drawings here so it's not too confusing. There's a lot going on here. Let's just get rid of all that. So we know our expectation is bullish, but we're currently in a pullback. That's my expectation. Doesn't mean I'm right. We mark this off, so we have this entire area here. See the close. I'll use this order block to the close of the fair value gap, and when price came in here, we're going to apply the same theory. So we have, let's see here on the 1 minute chart, there was a breakup structure here to the upside on a 1 minute, so 1 minute breakup structure, and then we had a 1 minute change of character. So what happened then was, my expectation could have been, and it was, that price could come up to this fair value gap, but I'm also very aware of the sweep. So that's why I don't just enter off fair value gaps. They're not a true reflection of what's happening with price. So I decided not to take this trade. Price came down and created a chock, so that's extra confirmation that a short is in play. So this low made the higher high, even though it was a failed change of character back up to the upside on the 1 minute. Price came down, then we had the highest fair value gap within that range, and again, I'm not just going to enter off the fair value gap. It's not something I do. People can do it, and that's fine if you're willing to take the risk on it, but I want confirmation in my trades. So price came up, and again, I'm looking at my entry process. So I have a high here, that's a 1 minute breakup structure. Sorry, not 1 hour. 1 minute breakup structure. The low that created that breakup structure is this low here. I pull that over. So then you can see we have a 1 minute change of character out of that level, and then I'm going to hunt for fair value gaps. So again, because price has confirmed it, you can see there's a very small fair value gap here. What I did was, this is where I was happy to take my risk. So price came in, I took it on the close of the fair value gap. Price goes above the high, and now my 15-minute order or fair value gap to the downside is my target. So we can see here, this is where I believe price is being drawn to. I'll drag that all the way down. I could look for the close of the fair value gap if I want to. I'll just drag that over. So you can see this is the trade we're currently in. A nice thing to see here is that price came down. It closed price here, so it hasn't left a fair value gap on the 15 minute. There's a bit of a fair value gap here on the 5 minutes, so price could want to come into this. My stop is currently above this high, as that is my current strong 5 minute high. So you can see here, price made a low, made a high, made a lower low, failed to make a higher high. This high then did its job. So if price comes above that, I don't want to know about it anymore. I'm happy to hold this trade. I'm in profit. I'm going to make profit. Would it be nice to catch a 9.5 to 1? Absolutely it will be. But I'm not going to stay attached to the trade. If it gives me a reason to exit, I'm not just going to go, well, let's just hold it and see. Price dictates what's going to happen. I will apply that to my psychology and my process. Price has not given me a reason to exit yet, so I'm going to stay in this trade as far down as I can. It could go even lower. You can see here on a 5 minute there's a lot more space, so technically if it comes down to here, I might move my take profit down a little bit lower to catch a 10.5 to 1, just because, you know, I'd be expecting a 1 minute change of character out of this level, and to be honest, until it does that, I'm probably better off holding the trade to maximize the amount that I'm getting it. It could go down and take out the strong low. Again, I'm not here to predict what the market is going to do. That is not our job. Our job is to react to what the market is doing. So if structurally it's telling me I need to do X, Y, and Z, I'm going to have to stick to that plan. Someone in the group took this trade today as well, and they exited early because of a pullback, and that's something to be aware of, because price has done its job, it's performed its task, and just because we get pullbacks doesn't mean that we should exit the trade. So I think there was a lot of consolidation here. It was a bit annoying if you were in from this level, because there's a fair value gap there, so you could have entered on this one, and it would be a little bit frustrating. But then structure started to come into play, started making lower lows off of this, started taking out this low, and then started taking out this low. So all the confirmations are there. It hasn't created it's created a small chalk here, but again, it's coming off a resistance level, so you can see here it's not really giving me a reason to exit. I'm happy enough to say that it should probably push down, because 5 minutes is in alignment here. I'm pretty confident it could pull all the way back up to close this fair value gap if it wants to. I don't dictate where the market goes, so again, like I said, I just have to react. My stop is here above this high. If I get taken out, it's not loss, but I need to stick to my process. I cannot just emotionally choose to close a trade, otherwise you're just going to keep taking losses and break evens over and over again. So once your plan is in place and you've entered a trade and you've done the work, that you've measured the setup and you've measured that everything is correct in terms of how you want to take it, take the trade, stick with it. Don't be taking emotional decisions throughout the process. Let the market dictate to you what it's going to do. So that's fair value gaps. You can see all the way through, price tends to pull back. There's a fair value gap here, price filled it. Fair value gap here, price filled it. Fair value gap here, price filled it. Very small fair value gap there between this candle and this candle, price filled it. Fair value gap here, price filled it. So again, it's just, you know, if you're taking a trade, you get a change of character, look for the fair value gaps, enter off of them on the lower time frame, use them as potential draws on liquidity, as part of your overall plan and process to trade the market. I hope that helps. If there's any questions, like always, just leave me a comment and I'll get back to you, and feel free to join the Discord.